daily outlook for Wednesday, July 15th. All right, start analyzing the range in which price is in and where does the range come from. Now, as we saw on Monday, right, price was trading at 50% of the previous monthly range. We know that this previous monthly range was a consolidation profile. Okay, so price ended up moving from 50% down to discount. And then eventually now we have this new candle inside of the range, which is yesterday's profile. Okay, which was, in my opinion, a swing to Z profile. Okay, we'll talk more about that on the lower time frames. But what this chart is telling us here is that price has moved from 50% back into discount, right? I told you to pay attention to these quadrants. Price has proved that it has been sensitive around these quadrants for a long time. So every time it will keep trading inside of this level, the quadrants will be sensitive, okay, and do offer trading opportunities. But so far now it seems that price wants to move away from this level. Okay, because we opened the week at 50%, we revisited discount, right? And now we have a potential swing low being created on Tuesday. Okay, so we do have here a good candidate for a potential Tuesday low of week profile. So that would likely look like a classic buy, or can turn into, say today expands, right? And Thursday, Friday could consolidate, as if this profile were to become true, right? Very likely Thursday, Friday will open inside of the range of the premium order block here. Okay, and again, same as this level, right? Also the premium level has proved, right, to be sensitive to price. You can see the closures here, for example, right? You can see the wicks, price just missing it here last week. So obviously, if today will be an open low high close profile, we're looking to target as a low hanging fruit, right, the low here, right, so around 31,000, 30,100. At this range we have this, right, see this wick that touches the low of it, that's the previous weekly high. So definitely a low hanging fruit objective in case of an open low high close profile. And past that, I would be targeting this candle here. Right, so the lower quadrant of the bearish order block in premium. Why this high and say why not this high? Well, it's because this is an intermediate term high on the lower time frames. Okay, it's this high right here, right, which had created an intermediate term high inside of the range. Other levels that could be useful to you on an intraday basis can be these quadrants here. Okay, say for whatever reason New York is trading inside of this range, or is expanding right into this range, all depending on how the daily profile is looking like coming inside of New York. These quadrants should be helpful from a lower time frame perspective. Okay, so premium targets, we're looking at a low hanging fruit objective being the previous weekly high. Okay, so 30,100, and then we're looking at the lower quadrant. Sorry, I call this the lower quadrant, but this is the low here of the order block. Then the lower quadrant, so 75% of it, 30,315 about, right? This aligns with the intermediate term high of Thursday, July 2nd, right? And then maybe this is more of a monthly objective, a weekly objective, say. Could it reach there today? Could be. I mean, if price will have an open low high close day and say the low of day is already in, right, so very early in the day, then that could leave enough room for for an expansion higher there. But overall I would prefer targeting this level, right, and so essentially the lower half here of the premium order block. Okay, so these are premium targets. In case of discount targets, right, we can use here that suspension block, right? This was a key level here coming inside of Monday and inside of the week overall. I'd say, price trades at the highs here and then fails, well then you can target 25% and eventually 50% of this level. You can see that 25% here of the discount suspension block aligns with the open today. Okay, so in case of an open high low close profile, this is definitely a great target here. And then if not, you'd be looking at 50%. Look, can it reach here or here in case of an open high low close profile? Sure, it can, but overall I do believe that the narrative here is stronger for seeing price trade towards premium targets. Okay, like we covered at the beginning of the week. You know, we come from overall a reversal weekly profile, right? One that respected 50% here of the discount rate. Now, price is choppy inside of this range, yes, but you know, the fact that the first full week of the month here was a reversal profile, created a suspension block here, and you know, it did trade very deep inside of the range, but technically it has never inversed this level, right? Right, then obviously from a higher time frame perspective, right, we're coming from expansion to consolidation, so that does favor, you know, doesn't mean that this week price will trade to all-time highs, but I'm saying if an open low high close, right, either daily profile or weekly profile presents itself, then the fact that it aligns with the higher time frame trend, right, so looking at the 3-month look back, this is definitely positive confluence. Right, it's type of days where you want to be looking for a trade essentially, because you have higher time frame on your side, lower time frame on your side, right? Okay, so we covered drawn liquidity, we covered where we are, where does price come from. We can look at the 4-hour chart here. What you can see is that yesterday, okay, created the low of day at 25% here of the discount order block identified on the 3-week look back range. This is the discount rate. Right then, and if yesterday you were wondering why New York was high resistance, well, first of all, look where New York opens, right? It opens in premium, and price was preceded by expansion. But where in premium does it open, right? Because price could open in premium and rally, but you have to see what's on the left side of the curve. In this case, the left side of the curve happened to be pretty high resistance here. Okay, you had the range of the new week opening gap, which was already rejected. You had the range overall here of a fair value gap. You had the range of a bearish order block, and most importantly, you had what we identified at first coming inside of the week as a bullish order block. Now, why is this one important? Because it's located at 50% here of the current dealing range that price is in, right, from a 3-week look back. And obviously this was a bullish order block. Monday ended up trading below it, so this became a breaker, right? Now, yes, we do have narrative, right, to anticipate that this level is going to become a reclaimed order block. But you know, from an intraday perspective, the fact that price opens inside of it, right, that's the type of scenario that can lead to high resistance price action, right? You always want to be seeing coming inside of New York, where is price opening and where does it come from? Right, the best case scenario is always, you know, New York opens in discount, right, and then does something like this and trades higher. But when New York comes from expansion, and especially if this expansion comes from discount, well, we're now opening at 50% of the range, we're opening inside of, right, of high resistance here. Okay, so these are scenarios that tend to lead to New York consolidation profiles. Now, price in Asia here seems to already be rallying. Okay, price comes from expansion, consolidation, right, at essentially the upper half here of the bearish breaker, but now, right, it's looking like it's rallying above. Again, this would become a reclaimed bullish order block in that case, right? So we would have very strong narrative to have premium targets, right, like we talked about on the daily, such as the previous weekly high, and then we'd be looking here at the high of Thursday as an objective, right, which aligns here with the range of the premium order block that's located inside of the range. Okay, so if New York is able to give you a trade up to here, right, then that would be the best objective. If New York is already trading above this level, then I'll be looking to target the intermediate high of Thursday, right, and overall the range of uh, the wick here of the large order block inside of the range. And if New York will open around these levels, then I will anticipate probably a choppy New York session, right? All depending on the faces of price delivery that price comes from. Okay, so this will be very, very important, seeing in New York if this level was reclaimed, right? Or if price simply, right, did something like this, turtle soup, maybe divergence, maybe the NWOG holds price, right? Price simply trades here and then trades lower. It will be very important to see if in New York this is still a reclaimed order block or if it's still a bearish breaker. Okay, let's look at the 3-day look back. Obviously you can see here, remember the levels that we had up coming inside of Tuesday, right? We had here a bearish breaker at 25%, we had a bullish order block at 50%, and we had, right, a fair value gap, a bullish order block located in discount. Right, so what you can see is that price in Asia at the open, right, revisits 50% here of what would be a breaker, eventually trades lower, right, in discount, and then has a turtle soup, and from there does what? Breaks structure here, right, as it changes to delivery, market structure shift, breakaway gap, right, creates here fair value gap on top of the fair value gap. And then you can see that the New York close comes at the high here, right, of what is now at the time coming inside of New York, a reclaimed order block. Okay, but again, look where New York opens inside of this range, right? We know that price comes from discount coming inside of New York. Right, price comes from discount, has expanded through 50% of the range, and now New York is opening in premium. Okay, so what's in premium? Well, in this case, we saw that there was here the range of the order block, right? Now, I prefer the wick on the 15 minutes since it's such a large wick. Right, and look at New York today. Right, it was very high resistance because it was trading inside of a premium array inside of the range, right? And it was preceded by expansion, right? So these are, again, events, scenarios where price can go from expansion to consolidation, or, right, say something like this, create high resistance, have a turtle soup in the range, and then trade higher, which basically is what it did here, right? It came back to range low, had a turtle soup, divergence with an hourly low with the S&P 500, and then traded back higher inside of the range, and ended up rejecting again at the CPI order, the CPI rejection block. Okay, so we come obviously from a bullish New York reversal to a classic sell day. Right, and now what was this classic sell day followed by? It was followed by here a bullish swing to Z. Right, but this looks, there's two ways you can view this. Right, you can view this as price going from expansion to expansion, or you can view this as price going from expansion to reaccumulation. Okay, now to be able to know which one that will be, right? Was this simply a phase of reaccumulation, right? A turtle soup in the range, or revisiting the weekly open and failing to continue trading lower, or is this actually a reversal higher? Well, let's analyze what's inside of the range here. All right. In premium here, I would simply put up the range of the new week opening gap. I think that this will be an important level. At 50% of the range, the previous daily low here, the previous day's range left an intermediate term low, right, on the lower time frames. This is an intermediate term low. It has a divergence. So very large rejection block here inside of the range. And in discount, right, it's very similar to what was here, right, where price ended up creating the low of day from. You got the range of a bullish order block, you got the range of a bullish fair value gap. Might actually be here a suspension block here. You know, a volume imbalance in discount, a volume imbalance in premium, and fair value gap right in between that. Right, and in fact, you can see that this level ended up holding price, but obviously there was, but the context was different. I do believe now if price does this, then it's probably going to go for the lows. But anything's possible, you know. Even if you have a choppy week, price could end up, you know, doing something like this. Well, everything's possible, obviously. I don't want to focus too much, you know, on what could happen. What overall, it's just important to have your levels up and then seeing the phase of price deliveries and the time of day, right, around these quadrants. Okay, so premium, we have the new week opening gap. At 50% of the range, we have an intermediate term low. We have the rejection block of an intermediate term low. And in discount, you get the range of a bullish order block and the range of a suspension block, okay, which is currently actually a breakaway gap. Okay, so, you know, again, does price come from expansion to consolidation, or does price come from expansion to reaccumulation? Well, you know, this level will be very important to determine that. Why? Because yes, it's the premium array, but it's also the new week opening gap, right? We have the weekly open right here. You know, if you come inside New York and price is doing this, very likely, right, you see an expansion lower, a distribution lower in the range towards discount target. Okay, so you could be looking at 50% here of this rejection block, and if price expands past that, then definitely this fair value gap. Okay, but this is again only in the case of an open high low close profile. Okay, so an open low high close profile, I do believe that if coming inside of New York, price has reclaimed the new week opening gap, will be important to see if there's a fair value gap located in here, and obviously how high will New York open, right, past this premium level, right? Like if it opens over here, it doesn't have to retrace inside the range, but it would be a good trading opportunity, right? You get something like this, New York retraces right inside the reclaimed new week opening gap, and then right, reaccumulates into it and then distributes towards premium target, right? We have the intermediate term high, and then overall the rejection block of the premium order block. Okay, quick recap. We saw that yesterday price ended up creating a low of day right at the upper quadrant of the discount order block. Price came from 50% of the range, traded back inside discount, right? Now is looking to trade higher. So in terms of buy side draw liquidity, we're looking at the range of, as a low hanging fruit target, the previous weekly high, and we'd then be looking at the lower time frame intermediate term high here from Thursday, July 2nd, right? As then we start trading it back inside the range of the premium order block. Case of discount targets, right? We'd be looking at the quadrants here of the discount order block inside of the range from a daily perspective, but obviously we could refine this, right, to lower time frames. On the 3-week look back, we looked at the fact that price came from discount and now was accumulating at 50%. Okay, so what I was saying is will be very important coming inside of New York to see if this level was reclaimed or not, right? That should already give you a good indication of bias and draw liquidity for the day. Right, and this here would make for a good premium target. Right, overall we're looking at the range of, you know, 2,000 to 2,500 ticks, so I think that price can definitely trade up to those levels if we're going to have an expansion today. And on the 3-day look back, we analyzed the phase of price delivery. Right, and what we're trying to answer here is price came from expansion, right, and eventually has created a swing to Z profile. Right, now is this expansion to consolidation? So this would mean here that we have a reversal at expansion to expansion, or right, that price expand to reaccumulate inside of the range. Right, this would be in the idea that here price has created turtle soup in the range, right, either in the range or above. Well, I mean, at this point it's looking to be the new, right above the weekly open here. Right, will price trade here and fail, or will price trade to these levels, right, and reclaim the new week opening gap. And then based on what it does around these levels, okay, then that should give you an indication as to, right, a clue as to the draw liquidity. Obviously, you'd want to be long towards these levels. If price ends up failing at the new week opening gap, right, it just simply trades above it, creates some kind of divergence with the S&P 500, and then reclaims it, right, as a bearish PD array. Here I said reclaim on the bullish side, but this would be inversing it, right, as it's a gap lower. Right, say this could be something like this. In that case, you'd want to targeting the current daily low, right, as we saw in the lower time frames. Sorry, not in the lower time frames. Okay, whatever, just disregard what I just said. But in terms of discounted levels, you'd be looking at the range of the rejection block, right? This is the rejection block of an intermediate term low, located at 50% here of this dealing range. And then, right, if price were to break this level, past that, we'd be looking at the range here of fair value gap located at 75% of the range. Overall, there's the order block. There's a discount order block of the range at these levels, okay? Okay, so also you could have these up, right? Last thing. If you believe this is a market maker buy model, price has had the turtle soup, the first stage reaccumulation, sorry, the low risk buy, the first stage reaccumulation, right, and this could have been here the second, right? Say price trades higher, so you can see that 2 to 2.5 here leads, you know, from 50% to the high, so the upper half here of the new week opening gap, right, and right to the high. So it will be very, very important to see if price respects these levels or inverses these levels. All right, and overall you can see here negative 3.5 to negative 4, right? If you take the premium level here, right, which we said to be a good draw liquidity, right, look at where negative 3.5 to negative 4 is, right? It's located right inside of the wick of the premium order block from a 3-week look back perspective. Okay, so I'll be coming inside the New York session with these levels on my chart, and very important for me to see how the new week opening gap was traded. Okay, same goes for here, the 4-hour breaker, right? Does it become a reclaimed order block or not? And the new week opening gap. Do we inverse the new week opening gap, or does price respect it? Okay. So that covers it for today. Good luck and good trading.